let's get back to our market conversation now. We've got Nitin Jain joining us this afternoon and Nitin Jain as well from Edelweiss. Gentlemen, thanks so much for being with us. Nitin, let me just start off with you and get a sense of what you're making. We have been discussing this hope rally for a while now. We're inching closer, of course, to elections. Given the kind of levels we're trading at, Nitin, do you feel we've sort of hit the maximum upside? Do you feel there's still more room ahead of elections?
Well, I think clearly once it is backed by FI buying, clearly as long as that buying continues, you're going to see an upside. No reason to believe that unless there are any global events that happen, no reason to really believe that FI buying could stop before the election. So you are likely to, you could see maybe a bit of a slowdown in terms of buying, which will ensure that there is some amount of consolidation that happens in the market. But really till the FI buying continues, this upward momentum will continue. It could be cyclical, it could move from one industry segment to another. Segments which haven't participated is something that you're likely to see having a run-up. But clearly markets do seem to an extent overheated. Clearly when you look at the economic fundamentals, really not very comfortable. I think clearly it's on the election platform, election result that you're seeing on the basis of expectations that this kind of FI buying that's happening. And you could just see probably buying before the election and post the election. If this rally does continue, there could be a significant sell-off that could just happen depending on what's the kind of run-up that you have. But clearly I think there's been a significant up move. Had it not been for the FI buying, this kind of an up move or this kind of an upward momentum would not clearly have happened, which clearly indicates that there needs to be a degree of caution that needs to be exercised. But with the FI buying continuing, probably this momentum will continue.
Maybe what are your thoughts in terms of markets right now? Because once again, just hovering around 6592, 6595, which is again the fresh all-time high that we've seen in terms of trade today. Any thoughts as far as the market outlook is concerned, or what should be the strategy?
Our bias continues to be long. If you're a short-term trader, then you need to stick to the momentum, and the momentum clearly right now is on the upside. Having said that, I think in the last couple of months you have seen a significant up move, and if you are an investor, then most likely it's possible that you might get better opportunities to invest. But what is happening is largely a lot of beaten down stocks and a lot of cyclicals which have been very under-owned are getting a lot of attention because people are scampering to buy because they want to participate, and a lot of good quality stocks have already rallied up. So a lot of these stocks are rallying around 20, 30, 40% in a week, 2 weeks time. So there's a lot of momentum. I would suggest a little bit of caution unless you're a trader and you want to participate in this momentum.
Okay, let's talk some stocks now. Nitin, let's take a look at the oil and gas pack. RIL ONGC, of course, in focus today on the back of that deferral. Let me first get a call from you on that, but then we must also talk about BPCL because it's completely on fire today. Let me just start off with an RIL.
Well, I think when you look at ONGC Oil India, it's essentially because of the news that came about yesterday. But that's not something that's going to delay the benefits significantly. Probably depending on what the Supreme Court decides, or depending on what the government actually decides, the new government which comes into power, depending on what they decide. There's all likelihood that you will see that gas price hike actually coming about. It could be delayed, yes, which will probably ensure that the profitability that's been projected for March 15 for some of these companies might not happen. That probably would need to be diluted a bit. But the fact remains that long-term benefit to these companies would accrue, and which would mean that for long term these become reasonably good acquisitions when you look at some of these oil and gas companies. Also, when you look at some of these oil marketing companies, particularly if the kind of subsidy that they have been suffering, or the kind of leakages that they've been suffering, would tend to come down. Even they, as the petroleum products become closer to market priced, you are likely to see them bleeding less, and which will ensure that there is not just lesser burden on them, but also a lesser burden on companies like ONGC and Oil India, which also automatically make them, when you look at it from a longer term perspective, decent acquisition. So you are likely to see institutional interest continuing in them when you look at it from a longer term perspective.
And apart from the oil and gas pack, you've got Wipro also that's taking a little bit of a knock, and some of these some of these other IT majors also have been trading a little bit on the lower side. Nitin, any thoughts when we talk about the IT stocks out here? Are they like somewhat turning out to be an avoid right now with the way currencies been panning out, the way cyclicals have been in focus?
I think we would consider this to be a reasonably healthy correction. See, the IT stocks have had a phenomenal run over the last 6 to 12 months, both in the large cap space and both in the mid cap space, and for I think the right kind of reasons. It's only that people had become significantly overweight that sector, and suddenly you're seeing a lot of these beaten down cyclicals rallying, and people want to shift focus there. But I don't think it's structural. I think it's largely tactical. And my suspicion is that over the next 2 to 3 months, once the Infosys results come out, and I think people get a little more confidence in how the earnings are growing, it's very likely that momentum might come back in these stocks. These might not be, very high beta stocks, but from these levels, I think they can give you reasonably good returns over the next 1 year.
Your thoughts as well, because the IT pack clearly has been in focus, and the kind of moves that we've been picking up on a couple of these counters. Wipro trading weak, HCL Tech, we're just getting those details regarding the block deal as well today. And don't forget, Tech Mahindra also comes into the index in just a couple of days from now, and then you have 5 IT majors that will be on the index, and hence the weightage also slated to increase going forward from there. Your thoughts, Nipul, when we talk about this sector?
Well, I think clearly all this turnaround has happened purely on the basis of that 1 or 2 changed guidance, or one or two quarter changed guidance by 1 or 2 companies that were there, that had been there maybe a couple of weeks back. That really doesn't significantly change the sector outlook. This sort of fall as far as some of these larger IT companies, IT stocks is concerned, is more because of the cyclical movement that you're seeing. So just as the other guy said, this obviously seems to be more tactical than structural. I think the IT companies as a pack, really, when you start seeing the market probably in a bit of a correction mode, is something that they'll clearly start attracting a lot of institutional interest all over again. And also, let us remember that it's yes, probably the outlook for the long term for all of these companies hasn't changed significantly. It's probably 1 or 2 quarter outlook that is there. So there's no structural change as far as the overall IT pack is concerned, whether you look at product based companies or services based companies, whether you look at large caps or mid caps. Clearly, I think it's a 1 or 2 quarter outlook change that's been there. Overall, the outlook does continue to remain positive for the IT industry when you look at it from a longer term perspective.
Nitin, have you had a look at BHEL today? The stock's up close to 5% in fact, and while we have seen a shift towards cyclicals, on a day like today, BHEL, even an L&T is looking incredibly strong. How bullish are you on some of these counters?
No, actually, capital goods is a very interesting space because despite the fact that they have rallied a lot in the last couple of months, a lot of these stocks are trading at significantly lower levels versus their all-time highs, whereas Nifty has already hit their all-time highs. Now, there is a core hypothesis that you have to form around the economy. If your belief is that Indian economy has bottomed out and elections is a catalyst, probably after which you might see capex picking up. In which case, I think a lot of these stocks are very, very attractively priced, because if any of that was to pan out, some of these stocks will easily double or triple in a couple of years. At the same time, if the capex cycle gets delayed, or if something does not pan out the way the markets are expecting from an election point of view, that's very likely that some of these stocks will correct 30-40%. So if you are willing to take that kind of a risk, then these stocks can give you great returns if your core hypothesis is that the economy has bottomed out. And our our hypothesis is more biased towards the fact that we might be on track of recovery, and hence I think we should start allocating some amounts of capital towards capital goods as a sector.
Nipun, your thoughts as well, because clearly this has been one of the key themes that have actually played into the markets over the last couple of days. I mean, we've seen L&T be an outperformer, some of the mid-cap ones like Crompton, Voltas, ABB, they've all been on fire. Is this looking attractive to you? Have you been recommending clients to probably still buy at dips probably in this sector?
Sure, I think clearly election dependent. Most of these companies with a reasonably healthy order book position. I think post-elections, if there is better execution that happens, if there is a possibility of lower interest rates probably only towards the end of this calendar year, then one does see improved execution that could happen, and obviously that is something that will change bottom lines as well as top lines for virtually all of these companies. So you've seen virtual stagnation in terms of execution actually happening, and which is the reason why all of these companies are probably available at ridiculous price multiples, price to earnings multiples, some of them even at less than 2, and clearly with this kind of healthy order book position, if there is that execution, and which can happen only about after there are based on a changed scenario, changed political scenario, probably greater approvals, greater reforms, faster approvals probably coming about, and which will ensure that faster execution to be happening for some of these companies. So probably they've run up in anticipation. They'll for sure, based on the election results, probably if you look at it purely from a 1 or 2 quarter perspective, they've run up probably in anticipation. But when you look at it from a longer perspective, purely election dependent, there could be a significant run up that could happen in this space. So it's a risky space, but when you look at it from a longer perspective, again, this becomes relatively less risky, because while in the last 3 or 4 years very limited execution has happened, that's not something that the economy can afford when you look at it from the next 2 to 3 year perspective in terms of actual infrastructure spend that the government needs to be doing.
Okay, let's also get your view from Sanjay Datta, Quantum Securities. He doesn't see a major upside in markets in the near term, but he does believe the worst is over for the banking space. Here's a chart.
Most of the positives that are attributed to the expected election result in terms of a decisive government coming in led by BJP, or whatever the market is discounting at this point of time, is more or less in the price, barring another 100 points in the Nifty. But I think the biggest story at this point of time is the broader market, which we're already seeing a good amount of participation from the institutional buyers, private client group in the mid-cap and the second-tier stocks. I think that's what the story is. From an index point of view, I think we're on the upper end of the range. Most of the positives are already priced in. I don't see much of a movement beyond 6,700. I think politics are already priced in.
Sanjay, I want to pick up on that point of the economy. As you're saying, the fundamentals far behind from what 65 or 6,700 the Nifty is right now indicating. Exactly a week to go for Dr. Rajan to take seat right now. The contours of the economy are not looking good at all and are not showing any signs of improvement. Even if you look at the CAD or the inflation numbers, the headline number may be coming off, but the mathematics behind it is not looking encouraging. Some people are of the opinion that a cut would be disastrous at this point. But for the industry's sake, do you think that he should bite the bullet and give growth and impetus at this point?
See, I'm not really, anticipating a cut or even, playing a cut next week. What I'm really looking at is what Mr. Rajan's assessment is going to be, in terms of inflation, in terms of what stance RBI needs to take. Does RBI now actually shift to a growth stance? Is RBI relatively convinced that inflation is stable or would start to come off? I think those are important indicators. And also what you mentioned that, things aren't looking good. Quite a few of the indicators that we are looking at are backward-looking indicators, we're not forward-looking indicators. So my sense is that things ahead, barring of course negative shocks that may come from a disastrous monsoon or something or anything else that shakes us politically and sends us into a bigger problem than what we've been in the last few years. I think, economic fundamentals have bottomed out. We can't get worse than what we have been. That's what is encouraging the foreign investors to start to look at India, and they think that a cyclical upturn is there now and would last for a few years. Commodity prices worldwide have come down. Inflation would thus obviously cool off. China is slowing down. So a combination of these things would probably influence what RBI speak is all about next week. It's not just about the 25 basis point cut or a signal like that, but more important as to what kind of stance does the RBI start to take, and what's his assessment of the economy and the monetary policy going ahead.
Given the fact you just talked about where value in the long-term play might be, some of these PSU banks are offering great value at this point, despite this NPA problem, and you've got a proactive RBI at the helm right now. Do you see that the fortunes of these companies changing over, obviously not in the next 2 or 3 months, but a good chance to come into these stocks at this point?
Well, yes, definitely. I think you need to get your timing correct, because Bank Nifty has been quite volatile over the last, few weeks. We've had a few days of continuous positive close, and then we've had a correction in between. One would have to time one's entry into specific stocks, but I think there's a big story that's brewing in the banking sector. Banks are underowned both by individual as well as institutional investors. We are seeing buying coming in from institutional investors also now, because everyone is convinced more or less that the worst is over for the banks, and there would be an uptake, problems would be solved, problems would be taken care of. And even in terms of NPA provisioning, I've had some conversation with some bankers, senior bankers, and what I understand is that 99% of the bankers have been on the conservative side and have completed their provisioning beyond what is necessary and have really taken a conservative view on this front. Yes, of course, there could be still more problems. The timing could be stretched. I'm not suggesting that the bank stocks will start running up and you'll see a 50% gain over the next 3 months or 2 months, but I think it's a good time on every decline to look at select PSU banking stocks.
That's some new coming in there in terms of market strategy. Out of a women conversation with Nitin Jain from Edelweiss Financial Services and Nipun Mehta, founder and CEO of Blue Ocean Capital. Nipun, that's the other interesting point that Sanjay was actually pointing out in the morning itself, as far as the banking stocks are concerned. And there's been this whole debate if one should actually give into the kind of valuation a couple of these public sector banks have been throwing up right now, because this entire series that we've seen, it's been all about the banking stocks and the kind of rally that we've seen. Nipun, any of these banking stocks on your radar?
Sure, I think you've seen a fair amount of underperformance clearly coming out of concerns on the asset quality. I think the March quarter results will probably be an indicator, but if you look at the advanced tax figures, haven't been too encouraging as far as the PSU banking space is concerned. So clearly when you see a market that has run up so much and a limited participation, if you go back about a month, and very limited participation that had come about is from the banking space, particularly the PSU banking space. That contribution was more of a catch-up that was bound to happen. If the market continued to rally, yes, the banking space needed to actually also participate to some extent, given the kind of weightage that banking space has. I think maybe things don't change considerably in a quarter or two, so probably March quarter will be an indicator, but June quarter is unlikely to again show up any dramatic change as far as asset quality is concerned. But again, I think a lot depends on the kind of change that you're likely to see on the investment cycle, the capex cycle, which will again then ensure that there is assets which are where there is restructuring that is happening, which will start moving on to accounts which are active. There'll be a lot of SMEs which are probably right now a lot of those loans which are doubtful. That could gradually change. So I think But again, 1 or 2 quarters is not going to change anything significantly. But when you look at again election result depending, when you see the possibility of the investment cycle changing and improving and credit growth starting at a better pace, obviously the banking sector is one sector which will clearly benefit out of the change that could happen. So again, looking at it from a beyond 2-quarter perspective, clearly the banking space does look reasonably attractive in terms of valuation as well.
Okay, Nitin, have you had a look at Hero lately? Because today also it's up about 3% and it's been moving pretty steadily this week so far. Two-wheelers haven't been faltering as badly as we've seen some of the other auto stocks do in terms of sales and so forth over the last few months. What's your call on a stock like Hero?
See, I don't have a very strong view on Hero Honda per se, but I think generally the auto pack has started to look interesting once again. I think stocks have had a very lackluster performance over the last 5-6 months, but particularly we like Bajaj Auto a lot, given the fact that part of the play is also exports, and I think there are very, very clear differentiators in the space that they play with, and we think over the next 3, 4, 5 years the strategy of significant differentiation and clear focus, I think will help them garner more market share. And if I have to choose one of the two-wheelers, I would probably stick my neck out and say Bajaj Auto. And in the auto space, I think Maruti has again started to look very exciting. I think it has gone through significant underperformance because of all the corporate governance overhang that they had because of some of these issues. But I think that being sorted out, being largely priced in by the market, I think in this kind of environment, I think it is significantly underpriced. It can easily value 18% one of these days. So it's starting to look good.
Based on your ticker, you can see the stock of ONGC, and this one's been extremely interesting. Just pull up the intraday move on that count and take a look at that. We were talking about the fact that the oil and gas sector is in focus, and look at the recovery the ONGC stock's actually seen in terms of trade today. That stock's actually moved into positive territory as well. It opened down almost 4 to 5% lower, and the stock has seen a massive recovery coming into trade right now. Take a look at that. It's been a one-way move. The stock's steadily been moving higher in terms of trade today. Nitin, we were discussing the same thing with Nippon also earlier in terms of the oil and gas pack. What are your thoughts here, Nitin, in terms of the outlook when we talk about these majors? Because Reliance Industries and ONGC clearly have been thrashed on the back of that news flow coming in regarding the gas price hike being deferred. But is there probably in fact more value? Is there more to look at beyond the gas price hike as well? Nitin, what are your thoughts?
See, there's something very interesting that happened over the weekend, and when you look at some of these oil and gas stocks, particularly the PSU ones, you have to keep that in perspective. Goldman Sachs actually came out with an ETF which collected actually 4,000 crores, and a huge arbitrage was available on those trades because you could actually apply in that ETF and actually short the futures. So what has happened is Thursday, Friday, you saw a lot of shorting in some of these PSU stocks. People who are applying in the ETFs and shorting to hedge themselves and making a clean 2-3% arbitrage. What has happened is a lot of that pressure actually went away Monday morning, and a lot of those people who were short had to come and cut their positions. And actually that has given a little bit of a fillip to a lot of these stocks. So that's for one. Second, obviously, I think a lot of these stocks are very, very undervalued, largely because of a lot of issues around the regulatory framework in which they are operating. But what has gone unnoticed, I think, over the last 6 to 12 months is very steadily a lot of these companies, the fundamentals have changed slightly, particularly for stocks like IOC, BPC, HPC and all. The subsidies have come down by 25,000 crores, and diesel subsidy, I think, by the end of this year should be completely gone. And we are on the right track, and these companies are trading at these valuations for now, 10, 15, 20 years. So very, very possible if things turn around, these stories can be big multi-baggers over the next 5-6 years. But you have to be willing to take that element of risk and risk how the policy regime will shape up. And if it works favorably, these are great stocks to own from a long-term point of view.
Alright, fair enough. Point taken there as far as the oil and gas pack is concerned. ONGC, one-way move coming in terms of trade. The Reliance Industries, remember, hasn't recovered that much as yet. ONGC seen a decent recovery, but RIL is still down almost 3% is what we're seeing on that stock. Nipun, the other interesting pack out here has been the FMCG segment. I mean, HUL today is showing some good traction. That one's up almost 2%. ITC is shot up almost 14% in this entire market rally that we've been witnessing. Is this something that probably investors should have some exposure to right now, or it's all about the cyclicals and one should stay invested there only?
Sorry, I couldn't get the segment that you were talking about, the sector that you were talking about.
ITC and HUL, Nipun, what are your thoughts on those two?
Well, on the one side, we've seen to an extent falling volumes that have been coming about over the last 1 or 2 quarters as far as FMCG is concerned. If you look at specifically ITC, probably cigarette volumes haven't really come down, but you look at some of the other products, whether for HUL or for ITC, yes, there has been some degree of impact that is there. Our sense is probably at least for, we're seeing probably a small change coming about in terms of demand, but that's not something that could be sustainable. There had been a fair amount of rural demand which had actually been pushing up volumes for some of these companies significantly. That is not undergoing a dramatic change, at least in the short term, at least for a quarter or two. Beyond that, depending on the monsoon, depending on how one does see business confidence or investor confidence, whether there is that kind of how the interest rates actually move, I think a lot of that would actually show up in terms of volume demand coming about, in terms of whether it is rural demand or urban demand that is there for a lot of these products. So really no significant uptick expected in terms of volumes, maybe for either the March quarter or for the June quarter again. But post that, one could see, depending on the monsoons, like I said, a change coming about, and that is when you could probably see a gradual up move happening. Till then, I mean, we've seen some amount of defensive buying happening there.
True.
But our sense is probably they would to some extent underperform the market.
Right. All right, gentlemen. We'll have to leave with that. Just getting the closing quotes coming in as well as far as the markets are concerned. Let's quickly count it down to that. Just a couple of seconds left for this trading session to come to a close itself.